The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, we took a look at the grain markets on Monday. A little bit of pressure in the corn trade. Soybeans did find some moderate support after a tough week last week, and the wheat complex was mixed. Overall, cattle and hogs finished the day in the green in futures as well. Let's talk about things as we kicked off the first full week of the month of August. John Heimberg with Total Farm Marketing joins us here for analysis today. John, hope you had a great weekend. Thanks for joining us, and it almost just felt like weather remains good, nothing to see here in the grain trade on Monday. Just not a lot of fresh news to move these markets really one way or another.
Yeah, definitely in the corn market, just didn't find any traction today, even with a little firmness in beans, and wheat just kind of holding its own today. The corn market just continued to slide, obviously settling at new contract lows for both September and December corn. Just kind of showing the negative feeling that's out there. We're watching the funds are growing that short position up to 180,000 contracts as of last week on Tuesday. So the sellers are kind of back in control of this marketplace, and really we still need that bullish news, and we're not getting it. The one plus right now, at least in corn, we're selling some corn. New crop sales, third best in a decade. And really only 2 years better was when China was actually in the market. We proved that last year. We don't need China for corn. We had a really strong year of export sales last year without really much on the Chinese purchases, if any. So it seems like we're starting out well this year with that. China just, obviously looking to different low sources. And then you got Mexico stepping in aggressively. South Korea was a really nice buyer last week of U.S. corn. So that's the one plus going for it. Maybe that's what keeps this market a little supported here. But I'm just a little nervous that the technical side, just the weight of what's coming at us in terms of old crop bushels moving out, new crop bushels in terms of the size of the crop. The USDA report probably going to show a pretty good size yield adjustment on the 12th. This market's just going to keep sliding into that and probably through the end of the month until we maybe get more focused on just where the new crop supplies are and get those old bushels out. Soybeans, decent day today. We're seeing a little movement in the Brazil market. Basis levels are coming up a little bit as the demand's been good for Brazil beans. Sometimes that helps lift us up in terms of marketplace. Seeing a nice move in the soybean meal market. Maybe it just got too cheap and we were borderline ready to break the 2010 lows in terms of price. Last couple sessions, we've seen some pickup there. So we'll have to see how that continues to lift the market. To me, it feels a little bit more like meal oil spreads unwinding. So we'll have to kind of watch that. And then, like I said, wheat today, pretty quiet day overall. Charts are still very, very negative in the wheat market. Dollar was softer. Maybe that helped out there, but, still about the global price of wheat, and Russia's still in charge of that.
I know we're going to have a lot of private yield estimates out between now and the next WASDE report, and then we're going to kick off crop tour season in a big way and much more. So we're going to get some more accurate-ish pictures of the size of this crop here in the U.S., I would say, over the next several weeks ahead. On the soy complex, I wonder if it was a bit of a bounce on Monday, just considering we lost, 30-some cents last week. And I know just in general, this soybean complex, it just seems on edge right now, John.
It does, and there's a couple big reasons why. When we talked about the strength in corn exports for new crop, soybeans is the exact opposite. We talked about last year at this time, things were poor. This year is even worse. Actually, it's the third worst book of sales since 2005. Okay, the worst, excuse me. So we're just not seeing any new crop business right now, and that's something the market's very nervous about. Obviously, we got a large South American supply from Brazil in terms of their record harvest, a solid supply from Argentina, and then with the export tax movement again, they're very competitive here in terms of the marketplace. And obviously the big buyer for us is China. That's still the focus. China has yet to pick up a U.S. bean. We're getting historically long in terms of that regard right now, in terms of usually they are buying beans by the first half of July and building those sales for that October, November, December, January shipment window. That's when we usually get our beans moving, right when they're fresh off the combine, off the harvest, and get them going to the ports. So there's a little concern here, at least in my mind, and I think the markets is this too, is China's going to do everything it can to minimize soybean purchases. I don't think that's trade war related or anything. I think it's just the volume of the market in terms of what prices are. We were seeing U.S. beans last week. We're about 60, 70 cents a bushel above Brazil for that key October, November, December timeframe. With the weakness, now we're probably 40, 50 cents above, those Brazil beans on the export market. I'm still holding a 960 downside target on beans. So we're kind of bouncing on trend line support here. And that's some of the reason I think we bounced to just a little bit of a technical area. But if we break through those lows from last week, this market has a lot of air under it. So I'm pretty anxious there. I think you can even sense that just even how the bean market is acting at this time frame. So, watch those export sales. Does China come to the market? I think they will, but it may be a very short window. And they may buy minimal supplies, which obviously would grow our carryout significantly.
And I wonder if we do see some sort of agreement, trade deal with China and the U.S., could that change the storyline? Or is it a case of, they've invested so much in South American infrastructure, for instance, and just the playing field has changed, I guess, and China has just switched over to sourcing its beans from elsewhere here, John?
Yeah, that is definitely something that's on the radar here in my mind. Maybe this goes back to the 2016 tariff war and the trade war that came during the first Trump administration, that they sat back and said, we need to have other sources. And they've obviously invested heavily into Brazil. And now we're even seeing some strong business out of Argentina. You go look at sales and shipments and cargoes bought for June and July. They picked up about 80 extra cargoes out of Argentina that they did not buy last year. 60 of those are probably replacement off of U.S. beans, because we typically have some sold in that time frame. And then there was a nice chunk of those that also came off the Brazil pile in that regard. Plus, you've been seeing them buy soybean meal. They made an agreement in 2019 to allow Argentina soybean meal into China. Haven't bought any till this year, and they picked up 3 purchases now, 30,000 tons last week, which comes to about 1.5 million bushels of beans in that regard, if you do the conversions over and off the crush. So again, it just kind of shows us that Chinese demand is getting met. They now are also trying to shave 1 million head off their sow herd. There was an article that came out a month ago that they're working on that. So that makes third and fourth quarter soybean demand look a little shaky here. And that's something I think is really driving this bean market. Excuse me, is the fact that they're just concerned that China is not going to come into the marketplace until we lower prices enough that they say, hey, we got to buy some U.S. beans. So that's kind of what's on my back burner, at least right now, what I'm watching closely in that soybean market.
Well, you mentioned China with their sow herd. Let's flip over to livestock. Let's talk hogs a little bit here, John. They ended up kind of being the winner in futures trade on the protein side Monday. Your thoughts in hogs in general? I know we got that August contract way up at the 108 mark. October's at 90 at the close Monday. I mean, what are you watching? Spread action, just overall trade in the hog complex?
A lot of it's tied to the cash market. Cash market's been very good. The index is still trading above the August contract, and it's trading strongly above the October and the December. So that's why we're seeing maybe a little bit of strength there. Hog numbers are still relatively tight. And we're going to get back into maybe a little better demand window here as we get through into the month of August and September, Labor Day demand. And, hey, it's now football season, and pizza sausage and things like that start firing up things a little bit. We're seeing that touch maybe in the dairy market this week. So right now, I like that hog market here. Good closes today, especially on the deferreds. August, we're pretty tight to expiration, with the 14th being the end of that contract month. So, really about 8 days of trading left in the August contract. So, but I like some of those deferred contracts with the way they closed today. We got some decent strength in that market. You got a cash market that's got some solid fundamentals, and you got a retail market that's still supportive. So sitting on the long side of that hog market right now, at least in those deferred contracts here, as we move into the fall.
How about over in the cattle trade? We started higher, chopped around a little bit, still finished in the green though on Monday. What are you tracking in live cattle and feeder cattle trade?
Yeah, that market, talk about uneasy right now. We got that huge reversal on Thursday, consolidated really on Friday, finalizing that cash trade, which was better. We had a good week of cash, excuse me, overall. And that was enough to maybe keep the market supported. Charts are looking shaky funds are still sitting on a pretty large long position. Actually, what's been kind of disappointing, even in this last rally, the funds didn't really grow their length. They actually reduced that net long position. So they're kind of murking some money to the sidelines here in that regard. So we got to watch this. Today was really a nothing burger in terms of trade, in terms of an indicator. We aggressively higher, aggressively lower, finished right smack in the middle. So now we got to figure out what the next couple days give us. It's going to be interesting to watch the cash trade here. Obviously the Packer dollars are getting spread pretty thin, showing net losses, $250, $300 a carcass is what I'm seeing on some of the numbers for the Packers. I think they might want to hold this cash trade back as best they can. They've been buying a lot of lighter weight cattle to just kind of maybe pull the numbers up, so they got a pocket where they can maybe manipulate the cash market. So watch it here in the next couple of weeks. August typically is not a good month in the cattle market. Last year, we actually had a very nice correction in the first half of August. So we kind of got the ground set for that. It won't be a fundamentally led correction. It'll be money flow and technicals. But it wouldn't surprise me you see some money flow out. Now, if we do get a decent correction, to me, that's an opportunity to get length until the longer term, because the fundamentals haven't changed. And now we'll get into some of the fall demand, and that could pick up this market a little bit here. Carcasses were at least steady today at midday. That could be something we'll have to watch. But I think there's a spot here where the market's maybe getting a little tired of being long, and we could see some pullback. But obviously, the cash market will still be king. If it comes back in, we're higher again at the end of the week. We'll see this market try to catch up to that cash market.
Dairy trade, volatility still sticking around over there, John?
Volatility still sticking around. A couple decent days here, though. We put a nice reversal in last week, 35 cents higher again on the September contract. Strong cheese trade today. First off, just the moving of the possible tariff issues. Terms of Mexico was a help last week, given that extension there with President Trump and the Mexican lead president, having their phone conversation, talking possibly maybe get some negotiations going with Canada. I think that's helping a little bit here as well. But also we're getting into the fall. Again, like I said, it's football season. That means pizza season. We're seeing a jump in maybe some cheese demand there with football getting back on the docks here this next. And on top of that, we're getting back into back to school season here too. And we're going to see that commercial purchases coming in on the retail side. So maybe it's a spot where we can see some lift in that cheese market. Nice day again, like I said, today, 7 cents higher in the blocks. Last year, we rallied about $3 in cheese here in this window. We'll see if we can get that type of follow through to get some value back onto this board for the dairy producer. So we're at least in a window. Maybe we can get things turned a little bit higher.
John, anything else you would mention or reiterate to folks here today?
Again, stay active in the marketplace here. Just don't kind of bury your head in the sand. Just keep asking questions. We got a lot of producers talking about basis for the fall. If you're going to sell stuff off the combine, do you start working some of those contracts and things of that nature now, just because there's going to be a lot of competition for bushels at the elevator in terms of getting rid of it. So there might be some opportunities there. Carrying the market provides you some opportunities as well. So, make sure you just look at different thoughts. Feel free to reach out to myself or anybody like myself just to see what our perspective is and things that maybe we can work on to help you manage the risk here, because it's going to be an interesting fall, especially if harvest comes along in a nice clip and we got a lot of bushels moving around, which it looks like we're going to.
John, if they want to reach out to you, I know a couple ways to get in touch. How can they get a hold of you?
Give me a call, 800-334-9779. Shoot me an email at jonh@totalfarmmarketing.com. And don't forget the website, totalfarmmarketing.com.
John Heimberg, Total Farm Marketing. Always good to talk with you, my friend. Thanks for joining us. Have a great week. We'll talk to you next week.
Sounds good. Have a great week.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.